Hi, this is Joyce, and welcome to Mom Autism Money. Today, we're going to be chatting with Shanté Nicole about credit score, FICO, and much more.
Yes, and Chante is just so great. We're so excited to have her here with us today. Now, Chante Nicole's passion for serving others has always been at the center of her life. She is an autism mom, wife, author, financial fitness coach, kids money coach, certified credit consultant, holds a degree in nursing, and is the founder of her nonprofit organization, FACE, and Financial Common Sense. Her mission is to educate and empower individuals to make better financial decisions in regards to rebuilding and repairing their credit, budgeting, developing saving strategies, and debt management. She is a panelist for SunTrust Bank's On Up financial campaign and also facilitates workshops in the Washington metro area. She's also the founder of Kids Making Sense, a financial literacy program that offers educational products and workshops in the community, including schools, churches, and recreational camps. In January of 2017, she created the online Facebook community, Financial Common Sense. There are currently over 96,000 members from over 100 countries. She utilizes her platform to inspire and educate her audiences through physical and digital products, webinars, and courses. Without further ado, let's talk to Chante. All right, and we are here today with Shanté Nicole of Financial Common Sense. Hi, Shanté. Thank you so much for being with us.
Hi, thanks for having me.
And we are going to talk today about a few things. But Shanté, I was wondering first if you might want to tell us about your experience as an autism mom and how you kind of make that work with your business. I know that you've got FACE, you've got a couple different projects going on, and I'm just perpetually impressed by how you seem to balance it all.
Thank you. So I can say, so my son, he's 15 years old. He has autism. He was the inspiration behind me starting FACE in the first place. That stands for Facing Autism with Children Everywhere. And, it was just once I got on Facebook and started to see like how many people like nationwide and even worldwide were actually going through what we deal with as well. I was like, wow, like it's not just me or my circle here in Maryland. It's people in New York, people in New Zealand, people in Africa. So I wanted to let everyone know, like I'm facing it with all of you guys as children everywhere, right? So the first thing I did was connect with a lot of groups on Facebook, like join all these groups and just connect and see like, where are you on the journey? My son is 4, your son is 13. Share with me where, some things that you've done. And now Dylan's 15. Now I'm talking to the people who have grown children, like, because that's the next transition for us. And so, but I'm also tapping back into the ones who are like, my son is 2 and just diagnosed, I'm at a loss. I'm like, yep, I was there. Let me help you out. And so I'm always directing them different resources and things like that. Locally, I was before the pandemic, unfortunately, going into different companies and doing autism awareness trainings for them so they know how to handle someone they may encounter with autism. So police departments, barbershops, and hair salons, when the young kids come in, they don't really know how to handle them when the clippers are too close to the ears or the water's pressure is too hard. And so really doing those sessions with them. And then went into starting my respite program, which I was really excited about, because the biggest thing I would see people say in these groups and parents I would talk to is that we don't get a break. We don't trust anybody with our kids. My child is 7 and he's still in pull-ups. No one wants to watch him. So I was like, I feel you, because I feel the same way, but I would love to offer this, experience for you. So in 2014, I started Faces Place, which was a respite care program on the weekends. And the parents, they would drop those kids off and run out the door. And we just, kept them from 10 to 2 every second Saturday. We had music therapists come in, dogs came in. We had moon bounces and movie time and arts and crafts. And so just a time for the parents to really just release, relax, no stress, even just for 4 hours. And so I did that for a while. And then that's catapulted into a summer camp just for kids with special needs. And I did that every year from 2015 until the pandemic hit. So unfortunately, I miss my babies. And so now Dylan is here with me. I don't work with my babies anymore. And it's been a challenge. I have to say, he's very mild as far as his temperament. So no meltdowns, he's not aggressive, things like that we don't have to worry about, but he doesn't have the language that a typical teenager would have. And so he can't tell me all of his needs. He can tell me what he wants, French fries, of course you can tell me that. But if something hurts or someone harmed him, he couldn't tell me those things. So that's the biggest challenge for us. But because he's so self-sufficient, balancing him in work isn't really difficult while he's in school. But I homeschooled him last year, and that was a challenge. He keeps me on my toes. He learns really quickly. So I was always like, I know what teachers go through trying to plan lessons, because I was always planning lessons and trying to help my clients with their finances and things like that. And then, insert the pandemic where people are losing jobs, they're being furloughed, they don't have the funds. What does that mean for my business? So I was really scared when the pandemic hit. I'm like, oh, there goes FCC. I've lasted, 3 years and I'm down the drain already. So, but my business spiked bigger than I've been busier than I've been ever since I started my business. So, and my husband is so supportive with this. And, he doesn't have any children, but he adopted my son back in 2016. And so he's been on this autism ride for a long time because we've been best friends since middle school. And so he's known Dylan and everything like that, but now it's on a different level. And so, I say all that to say, managing my business and being an autism mom and a wife, and it's been a journey, but nothing comes easy. And if it comes easy, then it's not hard enough for you, and it's not going to help challenge you, and it's not going to teach you any lessons, right? The whole idea about life is just, what can I learn from being here? I got put on this earth for a reason. At the time that I got put on this earth, how can I maximize my time here? Because it's not going to be forever.
No, definitely, definitely. And man, during the pandemic, have I been learning some lessons?
Yeah.
That I just love how you expanded that and like kind of took your support and expanded it to your community. That respite care thing is such a huge thing that I feel like not a lot of parents know about. And then at the same time, it is hard because you want to leave your child with somebody who's qualified, but like you might not have that qualified person in your circle, and so you wonder about the trust thing. So I think that's a really beautiful thing that you're doing, and I'm sure it'll be back up and running after
I hope
things are over.
I hope so bad, because I can imagine, like, life has been easy for me during the pandemic. I have to say it could be more difficult, but I know parents who have multiple children. I have one. Multiple children, probably most of them are on the spectrum if you have multiple children. And then you're virtual and they're virtual. And so I know it's been a mess. So I know parents are like, I'm about to either jump off this deck or I need a break. So I hope that I can start it back up soon.
Absolutely.
That will be me. I'm a parent of multiple kids in the spectrum. So yes.
I know it. I mean, I've cared for probably in the last 6-7 years, maybe 250 kids, and like none of them are the same, and I'm just thankful that my journey with my son isn't difficult, because it did allow me to give a lot of my attention to the kids who needed it.
You also have your financial community, Financial Common Sense, and we're going to talk a lot about that today.
Yes.
So today we're going to be talking about, Chante is a credit expert. And so we are going to be talking about all things credit scores, all of your questions, maybe some misconceptions you might have. And so we're going to just delve right into all of that. And Chante, I want to start things off by just kind of asking you, where do you start with clients when they come to you? What are some of the most common like starting places when it comes to learning about credit?
So learning about credit, I always do webinars called Credit 101, because people jump into this credit game and they want to already start taking pre-calculus, right? And I'm like, listen, there's some things you have to learn in arithmetic and basic math before you can go to pre-algebra. Before you can go to algebra, you have to take pre-algebra. So let's start from the beginning. And I'm so glad you said that. Where I start really are clearing up the misconceptions. I heard this, I read here, this other group said that. And so let's talk about, because if you think those things are true, then that's how you're going to try to operate. And I'm like, let's clear that up. Let's talk about the facts. No loopholes, no credit tricks, no credit secrets. I see all these books that are like credit secrets. I'm like, there are no secrets. They're just facts, right? And so it's really clearing up those misconceptions and then starting from the beginning, right? Like we talked about a little earlier. You want a better score. Well, where does that score come from? It comes from your report. Well, where do I pull my reports? Let's talk about that. Okay, they pull them, they're reading them, and they're like, I have no idea what I'm reading. So let's go line by line. So it's really doing a credit inspection. What I tell people is that I am your credit GPS guide, okay? When you get into a car and you type into your GPS where you want to go, what's the most important question it's going to ask you first? Where are you currently? I can't tell you how to get where you're going if I don't know where you're starting. And so people do inbox me with a dissertation or a quick snapshot about their credit and say, what do I do? I'm like, I need to know your exact starting point, right? Or if I'm not going to help you, you need to learn your exact starting point. What do I need to do to meet my goal? Because your starting point is going to be totally different than mine, you know? So, you know, I can have a client named Susan who said, I'm trying to get to the Empire State Building in New York. She's in Texas. Well, I'm trying to get to the Empire State Building. I'm in Maryland. We can both get there, but the way we go are going to be totally different because she's starting in Texas and I'm in Maryland. So it's really about clearing up the misconceptions, talking about the facts, and then doing a credit inspection. Before you buy a house, it needs to be inspected to figure out what is wrong and what do we not have to worry about. Same thing with your credit. Some things people think are wrong. I'm like, that's actually a good thing to leave on your credit. And some things that people have wrong, they're like, I don't know what to do to fix it. So that's where I come in. We have to inspect your credit, and then I need to guide you where you need to go. So those are the first steps. Clear up those misconceptions, lay out the facts, and then let's figure out where you're starting.
For sure, for sure. And like for people who are like level 101, maybe they're not into personal finance, maybe they've never looked at their credit report before. Can we just start with a super basic conversation about the difference between credit scores and credit reports and some of the different companies that you might encounter and deal with when you're looking at those two different items?
Absolutely. So, and I always use this analogy. When I used to go into middle schools and high schools and colleges, I would say, tell me how your mommy and daddy know how well you're doing in school. And they say, Miss Shanté, on my report card. I said, and there's also a 3-digit number associated with your report card. What is that? They say, my GPA. I said, right. So when you're talking about credit, your report is what the lenders check to see how well you're doing with your finances. And that 3-digit number, which is your credit score, comes from the information that's listed on your credit report. That's such a simple thing to say, but it's such a big thing that people don't get. They think the score is something and then the report is something. And it's like, no, the score is coming from what's on your report, right? And so then it's like, well, I want a high score. Well, let's talk about the things that go into factor, computing that credit score. And that's what's important. So the difference is your report is what the lenders send to the credit bureaus to update with all the information on how you're doing with certain accounts. And then that score is pulled from an algorithm based on the things that are on your credit report. Some things matter, some things don't, even though they may be listed there. Don't think that everything on your report goes into calculating your score, because something like your name or address, that has no bearing on how well your score is. So that's the difference. Your report is listing your information. The number is just, it determines your risk. So the worse your credit is, the lower your score. The better your report is, the higher your score.
What are some of those factors that are going to impact your score? Like, what are some of the big things that show up on your credit report that actually matter?
So there are 5 components that go into calculating a FICO score. I don't want to say credit score. I want to say FICO score. And I'll talk about that a little later, why I'm saying the difference between the two. But you have 5 components, and I'm going to name them in order of importance. You have your payment history. That's the highest component. Payment history. You have utilization. You have your length of credit history. You have your credit mix and your inquiries. So let me break those down really quickly. Payment history is self-explanatory. How well have you been able to pay people on time that you borrowed money from? Because that's what credit really is all about. How responsible are you with borrowing money and paying it back? There's no other way that lenders can see how well you're doing if you're not borrowing money and paying people back. So if you don't have credit, you are still a risk, because they're going to pull your report and see nothing. And they're going to go, well, we don't know how well you are doing with borrowing money because you never borrowed money and paid anybody back. Okay, maybe from your auntie or your uncle or grandma, but not a lender, right? And so payment history is the highest component. Utilization. A lot of people don't even know this is a factor, let alone how high it ranks. It's right under payment history. And that means how much credit are you using in relation to how much you have available? You have $1,000 credit card and you're using 500, that's 50%. That is a no-no. FICO says, they're getting way too risky. They're almost at that max. So they really don't want to see more than 30% utilized, but we'll talk about a great effective way to use your credit cards to boost your scores a little later. But that is a factor. How much are you using? Are you maxing out your credit cards? Are you using any? So the people who have no credit cards, then you can't show good utilization. So your scores are going to be affected negatively. If you have credit cards that say, well, years ago I ran them up, and as soon as I paid them off, I cut them up. Well, you can't use what you had cut up. So then that's going to affect you negatively. Or you have them and you just say, I just don't use them, or I just wait until I have an emergency. That's going to always affect your score negatively. So you have to use credit, but that doesn't mean you have to be into debt. Your length of credit history. How long have you had credit established? The newer you are, the riskier you are. When you're 18 and 19 and just starting out, you're probably not going to get favorable, credit cards or favorable loans, or you're going to get them, but the interest is going to be high, or they're just going to deny you because they're saying, we're not going to take a chance on you. We're not willing to take a risk. We don't know. Go to somebody else, build your credit up, come back, so we can see how well you're able to manage. So new credit is still bad credit. I'll say it that way. So your credit mix, this is a big one. People are like, I don't even know what that means. And so there's two types of credit that are in this world. There's revolving and installment. So if you hear these fancy terms, let me just tell you what they really mean. And revolving lines of credit are simply credit cards. That's it. So you hear that fancy, how many revolving lines do you have? How many credit cards do you have? Because it's revolving. If you go into a revolving door, it just keeps going around and around until you decide to walk out of the building, which means you can use the card, you pay it back. You use the card, you pay it back. It's revolving. It never ends until you actually close it or they close it, right? But the idea is that we don't want to close it because we want to keep using it. And then installment, think about you have a house and you say, I want to build a deck on the back of my home. The contractor comes and builds that deck. Well, once he's done, you can't wake up the next morning and go, I'm going to just push this 5 feet to the left because I don't like where this contractor placed it, right? It is fixed. So think about those loans that are fixed. Mortgages are fixed. It's the same amount every month. Auto loans are fixed. Student loans are fixed. A loan from a bank to pay off some debts or get your home renovated. Those are fixed. So FICO wants to see, can't you manage 2 different types of loans? We don't want to see a report with all revolving. We don't want to see a report with all installment. We want to see a nice, healthy mix. So even though it's at the bottom of the totem pole when it comes to how scores are calculated, it is really important. If you have only revolving and you add an installment, you're going to see a nice jump because it's like, she has a mix now before you didn't. And then your new inquiries and your new accounts. Hi, okay. Every time you apply for credit, you take a small hit because FICO is like, a new debt. And then once it reports, it's like, we see a new debt. So you're going to take those small hits. Typically, you do rebound because now that you have a line of credit, it's like, okay, well, now I'm going to have great payment history. I'm going to show some positive utilization. I've added to my mix. I just opened it, but as it grows, I'm going to expand my length of credit history. So don't be afraid to apply for credit because you're going to take a hit. It's inevitable. You're going to take a hit, but you'll rebound. The thing I like to say is don't get crazy and apply for a lot of stuff in a short amount of time because that small hit that you would have taken turns into larger hits. This really happens when people in 2 ways. You're trying to rebuild your credit and repair. So you just start applying for every credit card that comes through the door, every credit card that pops up as an ad on your Facebook, because you're just trying to build and you're really not doing any research to see in the condition that my credit is in, which card should I be applying for? Don't apply for the Amex, frequent flyer miles card if you're just starting to build, Apply for the ones that are going to be for people in your situation. The other way it happens is Christmas time. Would you like to apply for this card and get a 20% discount? Yes, I would. You go to the next store. Would you like to get a 15% discount? Yes, I would. And then you leave with 7 inquiries. Maybe you didn't even get approved for all of them. So the inquiries are going to show and you have no account to show for it. Lenders are going to look at that and go, what's wrong with this person? They're thirsty for debt. They're thirsty for credit. We don't want to take a chance. So even if you have, it's like people have been denied credit just simply because it said too many inquiries. So you want to really be careful before you just start trying to rebuild and make sure that you're doing everything the way you should be, not the way someone else did.
Definitely. I have a question about that. I've heard a lot of times people, if you're applying for like a mortgage or an auto loan or something, because those little hits do add up, some people will tell you to apply for a lot of credit all at once, like within one day. Maybe you go into the dealership and they run your credit with like 7 different banks. Is that a negative thing, or is that something kind of different when you're looking to secure a debt like that?
That is such an awesome question because I did not even think to bring that up. Thank you. So there's something called rate shopping, and FICO is very much aware that consumers do that. When you go buy a car, you do not accept the first loan that they gave you. They may be 10.9%. They checked with another bank and they said, we'll give you 7. The last bank said 5.5. Well, you would have never known that if they didn't check it multiple times. So the first thing is people freak out. They ran my credit 17 times. I didn't approve that. Well, they were trying to help you, right? So FICO knows this. So what they said is any mortgage loan, student loan, like private student loans or auto loans, when you have those inquiries that are done within the 30-day period, they will all show on your report as separate individual inquiries, but they will only count as one single inquiry towards your score. So it'll be like 1 as far as how it calculates into your score, but they will all show. People are aware of that. Most lenders are aware of that. So they don't look at that as unfavorable. What they look at is, I apply for a whole bunch of loans. I apply for a whole bunch of credit cards, because those are individual inquiries, right? Because you're not rate shopping with the credit card. You're just trying to get approved for whatever limit that they'll give you. So that's a little bit different than an auto loan or a mortgage. Like even when we refinanced, we went through like 3 different people before we decided who to go with, because we wanted, and we tried to make sure we did it, in the 30-day period, so it can only count as 1. So yeah, those aren't bad, but because people are uneducated and they really don't know, they just like, 8 inquiries. I'm like, you're fine. So yeah, that's a great question. Thanks for asking that.
Oh, thank you for answering. This is all very interesting. This was several years back now. This was maybe 8 years ago, I want to say. There was like
2014, yes, almost.
Yeah. FICO rolled out a new model where they were like, okay, we're not going to include medical debt. And that can be important for families with kids with disabilities, because like a lot of times you end up racking up a lot of medical debt. I'm wondering if you can tell us a little bit more about that, and maybe a little bit about situations where that FICO model might not always be applied. So even though there's this new method of scoring, you might not benefit from it depending on which score your lender runs, or if I'm just totally off base there.
You're not, but it's so much to dig into. Even before that, there are over 28 different FICO scores that exist out here, right? And so it is important not only to know which score you should be focusing on when you're applying for specific things, but which scores that the lenders that are pulling your scores actually look at, because some of them look at all of them, some of them look at only 2, some of them only look at 1. So that's another thing. That's one thing. So let's start from the beginning. There's FICO 8, right? That's the most widely used scoring model. That's the most generally used scoring model. So when you get free FICO scores from places, they typically give you the FICO 8 score, which is a good one. That's the one you should know. But there are also FICO industry scores. So you have FICO auto scores. So we talked about all those inquiries. When you go apply for a car, they're not pulling FICO 8. They're going to pull FICO auto scores, because there's a certain level of risk involved with buying a car than it is with applying for like a secured loan for something you need money for, right? Then you have FICO mortgage scores. Those are calculated even much different, because that's the biggest risk out here. You want a bank to buy a house for you for $300,000, $400,000. If I check your FICO 8 score, it might be okay, but your mortgage score might be a little lower, because there's some things that are affecting it more than FICO 8 is. Then you have FICO credit card scores. So when you're applying for a credit card, they're going to pull those scores. Then FICO 9 came along. It's the newest scoring model, everyone. Well, that was back in around 2014. We're now in 2021, and no one's still using FICO 9. Lenders haven't migrated to FICO 9, but let me briefly just tell you the changes that they said. We know that consumers are having hard times with certain things, and I know there needs to be a major overhaul with how scores are calculated and things like that. So FICO 9 was going to be something that was really going to help a lot of consumers. And so one thing was medical debt. They said that it's going to have less of an impact on the score. So not that it wouldn't affect it, but if you have a medical collection, that's going to affect you not as great as a credit card collection or, a apartment lease that, you broke or something like that. The biggest thing is paid collections. Paid collections right now, if you get a collection, the damage is done once it hits your report. So whether you pay or don't pay, it doesn't matter. So paying it doesn't make your score go up, and not paying it keeps the score as is. So people say, well, why would I pay it if it's not going to help my score? Well, let's go back to where that score comes from, the information on your report. Even though it doesn't calculate better score for you, a lender's going to pull your credit and say, oh, they had a collection, but at least they paid it, right? So I like for people to know it's not just about your score. It's about your overall profile history. Having a paid collection looks way better than someone who has unpaid, right? They're saying, okay, life happens. We know they took a hit, but they took care of their responsibilities. Better than someone pulling it and seeing an old collection from 4 years ago for only $250 and it's still sitting there. Why would I give you a loan if I see that you couldn't pay somebody for 4 years, only $250? So those are the things people need to think about, not just, I want a 700, but like making sure that your profile is up to par, right? So that was one thing. FICO 9 said, when you pay a collection, the collection won't even be calculated into your score anymore. So not that it increases it, but it just won't be affecting it, right? So that was another thing. And then you have rental payments. Rental payments right now. Should I sign up for Rental Karma? Should I sign up for Rent Reporters? They report my rent. Is that going to help my credit? Well, back then, I can't say back then. As it stands with current FICO scores, those rent payments don't affect FICO scores. They affected the Vantage scores. And I know we're going to talk about that later. So it wasn't really helpful if you're applying for things where they pull FICO and the rent reporting is only helping Vantage scores. Okay, so let's circle back. So FICO 9 was saying we're going to count rent into the scoring model now. So that it was just really going to be a great opportunity for consumers to really not feel so super overwhelmed with trying to rebuild and repair. But FICO 9 is still, no one's migrated to that. And they even have FICO 10 and the FICO 10T, which has different requirements and things like that. And they haven't migrated to that either. So I don't really like to go deep into it because people barely understand regular FICO scores that exist now. And then they're like 9 and 10 and 12. And so I like to just briefly talk about, I like that you asked about FICO 9 because even some credit card companies, as a benefit for being a client or customer, they'll give you a FICO 9 score. And people are like, well, what is that? I don't even know what that is. Should I focus on it? It's much higher than my other scores. So they get excited. And I'm like, no, even though you see it and it's great, no one's checking that score. So you still need to focus on the other ones.
No, definitely, definitely. And thank you for clearing some of that up for us. Why don't we just get into Vantage and FICO scores? Let's talk about a little bit of what the difference between those two are and maybe different situations where you might see them.
Absolutely. So at the beginning of this conversation, I broke down the 5 components of a credit score and I listed them in order of importance, right? And so Vantage scores, they have 6 components and they are weighed completely different. I would just say that's the simplest way to explain why you could see such a huge difference between the 2 scores. So I know, Credit Karma. Let's talk about that. That's a big one. Everyone sees the commercials and it's like, get your free score. And so everybody loves free 99, right? They don't want to pay for anything. So they do Credit Karma, but they come to me or they come in my Facebook group and they say, these are my scores, help me out. And I say, if I can get to that post first, the first thing I say is, where'd you pull your score from? And they say, Credit Karma. And I'm like, no. And I may put a couple of crying emojis just to kind of, make them laugh a little bit. But I say, and they say, well, why is that a score I shouldn't focus on? And I say, well, they're calculated much differently than FICO. And lenders pull FICO scores when you're applying for credit. So the thing that hurts my heart is that people don't realize this. They pull their Credit Karma scores. They think they have a 680. They go apply for something and they say, well, no, actually, ma'am, here's what your real score is. And it says like 605. And they're like, what? And you're like, I don't understand. Why is it so different? That is why. There's several different credit scoring models out here. There's FICO, there's Vantage. Even each credit bureau has their own scoring model. If you go to TransUnion's website and get their scores, you think, oh, because it's directly from TransUnion, it must be the score I need to focus on. But it'll tell you, calculated by Vantage. It's the same scores as Credit Karma. So they're not trying to trick you. The information is right there. People just don't know what to look at. So if it doesn't say FICO, it's not the scores you should focus on. So you have another one, IdentityIQ. That's another one. They actually charge you for Vantage scores. I'm like, you can actually get those for free on Credit Karma. Credit Sesame, I see those commercials. That's also Vantage. So just really be careful. And FICO, I tell you, Vantage, it may be in small fine print somewhere. FICO is going to be right there in your face. So there's no secret. There's no get the magnifying glass and try to find, what kind of score this is. It's going to say FICO. And it'll also tell you which FICO version. So there's several different credit score models, but there's several versions of FICO. So like I said, FICO 8, FICO 9, FICO 10, FICO Auto, FICO Mortgage, FICO Credit Card. So it's just really important to know what you're looking at based on what it is that you're trying to accomplish. Don't look at mortgage scores if you're trying to go buy a car.
And now a word from our sponsor. Let's talk elopement. And no, it's not just running away to Vegas to get married. Wandering, also called elopement, is an important safety issue that affects some people with disabilities, their families, and the community. Nearly 50% of individuals with autism spectrum disorder have attempted to or have successfully eloped from a known adult. As a parent, nothing's scarier than finding your child wandering or alone outside when you thought they were safe in bed. Maybe you can't travel because you can't leave that sleeping setup you rigged up at home, leaving you feeling like you can never go on a vacation or take a trip as a family. Above all, you're probably exhausted from missing sleep. Let us introduce you to the Safety Sleeper, an enclosed and portable sleeping system. Designed by Rose Morris, a mom with a child on the spectrum, the Safety Sleeper is the most versatile bed system on the market. It's durable enough for everyday use and smartly designed to be portable for travel. You can buy the Safety Sleeper direct through Medicaid or your private health insurer. Plus, our friends at Safety Sleeper have put together a free trial giveaway exclusively for Mom Autism Money listeners. Learn more at safetysleeper.com/MAM. That's short for Mom Autism Money. Again, that's going to be safetysleeper.com/MAM.
What do you do now? Where do you get your free credit report? Like, where will you send your students or your group to get a legit credit score? Because you know
So
how sometimes when you read something, you're like, okay, go here, here, and then that's not really accurate. So I'm sorry.
That's great. So that's the big thing. People say, well, where do I, I need to know what my score is. Where can I pull it? There's places to pull your reports and scores for free, and there's places where you pay. Of course, you pay, you get better benefits and better advantages, but the free stuff, let's just cover that. So I know I killed Credit Karma and I kicked Credit Karma in the butt when we were talking earlier, but I do say that you can check Credit Karma for your reports only. Okay, they're going to give you a TransUnion report and an Equifax report. Well, that just leaves one more credit bureau because there are three major credit bureaus: Equifax, TransUnion, and Experian. So they're going to give you TransUnion and Equifax. So now you have to figure out where to pull Experian from. So if you go to Credit Karma, you get those two. If you go to Experian.com/now, NOW, they will give you a free report as well and a free score, but just from Experian. So when I'm doing my personal one-on-one coaching sessions with my clients, that is where I tell them to pull the information to give me, right? So I can log into their Credit Karma. I have the two from there. I log into Experian. I have the one from there. Well, why is it important to check all your reports from all three? Because not everybody reports to all three credit bureaus. This is why also you can have such different scores between the three. Even if you're looking at FICO 8, you can have a FICO 8 that says 620, one that says 657, and one that says 590. Well, how come they all say different things? Because again, the score comes from the reports, and the reports all look different because depending on what you applied for or where they pull your score or who reports, things are going to be different. So you can get those for free there. Also, annualcreditreport.com. This is probably the most comprehensive report I have ever seen, no matter where you pull them from. And they do it for free. Pre-pandemic, they said legally, everyone that lives in the US can get one free report a year. Okay, so if you pulled it in September for the first time, that means every September you can get a free report. However, whatever report you pull in September, that's the last updated information. So if you go look back at that same report in October, the information is not going to change. If you look at it in December, it's not going to change because they said we're only giving you what you asked for at the time when you pulled it. But reports update every month. So that means you need to be having access to something that is going to give you monthly updates, right? So yes, go pull it from there so you can see any and everything that's listed, but don't rely on that for updates. Now that was pre-pandemic. Right now, annual credit report said we are allowing consumers to pull their report for free every week until next April. So yeah, you will see changes on there. Now, lenders update, they typically send updates monthly to the credit reports. So I say looking weekly will just drive you crazy because you're not really going to see many changes week after week. So I would just say every 30 days, just make it your business to pull your credit reports. So that's where you can get them for free. Also, you can get a free score from Discover Card. So if you don't have a Discover Card, they said, you know what, that's fine. You can go to creditscorecard.com. We will give every consumer who signs up with us a free Experian FICO 8 score. If you do have a Discover Card, for being a customer, they give you a free TransUnion FICO 8. So that's 2 free scores from 2 different credit bureaus that you didn't have to pay for. If you have Discover, they give you TransUnion. If you don't, they'll give you Experian. Again, these are just the scores, not the reports. So that's where you can get them for free. Even some of your credit card companies that you're with, like Discover, they'll give it to you. So Bank of America will give you a free FICO 8 score, CitiCard, Navy Federal, Wells Fargo. But here's the kicker. You have to make sure you're paying attention to the version they're giving you, because not everybody's giving you the same thing. So CitiCard, they give me a free Equifax FICO credit card score. So that's all it's good for. If someone pulls FICO Equifax credit card scores, that's what they're going to see. Wells Fargo gives FICO 9. So although you say, but it says FICO, Chante, it's FICO 9. And we talked about earlier, no one's using that. So even though you may be jumping for joy when you see a high score, it really means nothing. Navy Federal, if you're with that credit union, they give you FICO 9. So even though it says FICO, just really pay attention to what it says. And then there are companies that give a score, but it's not FICO. So Capital One is a big one. People like, but it's Capital One. They're a reputable company, but they're giving you Vantage scores just like Credit Karma. So ignore those. Chase is a big lender, but they also give you Vantage. So it's very important to understand that even though they're giving you scores, they're not all created equal, and we need to be educated on the ones we should ignore and the ones we should focus on.
Yeah, absolutely. So after you have found your free credit report, how do you go about like going through that? Like, I feel like you should do it line item by line item, trying to find like, I don't know, any information that might be fraudulent or erroneous. How should people go about doing that?
So it's 2 reasons why people should be staying on top of their credit. Well, let me say 3. Number 1, the credit bureaus are for-profit companies, and they get paid every time people report to them. So when companies report to them, they put whatever these companies tell them to. They do not care if it's right or wrong. They're like, this is what they told me. This is what I'm going to put. So yes, there are cases where they get things screwed up, and you check your report and you're like, this isn't mine. Where did this come from? Or this is mine, but the balance is incorrect because I paid $1,000 off of this and you still have that I owe 1,000. So it is really critical to check your reports, because if no one else is going to pay attention to if something is correct, you're going to pay attention to whether something's correct. So yes, you should be checking line by line, every single thing. But a lot of times the issue isn't that they can't read, right? Pull out reports and read. It's like they don't know what they're reading. They don't know what means what. They don't understand what should I focus on when it comes to all these things that are listed here, right? And so that's kind of what I do when I break down things with my clients. They're like, I can pull my report all day long. I don't know what to do with the information I see, right? So yes, you want to go line by line, not only to see if things are reporting inaccurately, just to see what is my starting point so I know which direction to go in with rebuilding and repairing. As Chante said, credit mix is important. Well, I just check my report and I don't even see any mix of credit. All I see is 1 credit card. So that means I need to add an installment line. Or I have 6 credit cards and 4 installment lines. My mix is pretty okay. So I don't need to add anything else. So it's really about knowing which direction to go as you're looking at the information that you're seeing. So yes, line by line. I actually have a workbook included in one of my credit repair books that literally, it just breaks it down for you. Each page says credit cards. Okay, well, what information about the credit cards should you be writing down? The name of the lender, the date that you opened it, so you know how long you've had it open. What is your limit? What's the balance? So we know how much we're utilizing, right? And then we say, well, how many late payments do I have, if I ever had any late payments? And then when were they? Because it's 2021. If you tell me, oh, I'm trying to fight these late payments from 2017, I'm going to tell you, please leave that alone, because it's really not affecting you much right now. But people see it and they think, I see red X's all over my report. Depends on when you got them. So there's so many things that just go into the rebuilding and repairing process, but people don't know. And so yes, absolutely, line by line, writing down any remarks that you may see, any late payments, writing down when they were. If you have student loans, are they in default? Are in the deferment status? Because how you handle those are 2 different ways, right? Auto loans, what is your interest? How much are you paying every month? Are you paying bi-weekly or once a month? All of those. What's your term? Is it a 60-month term or 84-month term, which I think is crazy, but people have them out here. It's really about, yes, doing a full inspection. When we got our house, that man came in here and he inspected things that I didn't even think mattered, but it was on that paper. So he checked it. And I was like, wow, now I can see how important getting an inspection is. So yes, you want to go line by line and you just want to capture everything that is listed there. So you say, all right, now I know where to start. If you don't have any medical collection, then guess what? I'm not going to tell you what you do to handle medical collection, but I'm going to tell you how to handle a loan you co-signed for somebody, or an authorized user that you signed up for. So really, it is about knowing exactly where you're starting and knowing how to navigate through your report.
Yeah, absolutely. Absolutely. So let's talk about, there's been this new thing, like a new advertising push from Experian, and they have this feature called Experian Boost. And some people think it means that they're going to get an automatic boost on their credit score. And that's not super how things work. I'm wondering if you can educate us a little more about what that is and if people should even be bothering to use it.
So oddly enough, people have seen big boosts in their scores when it comes to signing up. But let's talk about this product. It's called Experian Boost, which means it's affecting one credit score, which is Experian. So you can boost that all day long. If you're applying for things and people aren't checking that score, where does that leave you? Back in. So I don't like looking for these quick boosts, right? Because overall is what's important. So I got my experience score boosted up 50 points, but my Equifax and TransUnion still sucks. And guess what? I still don't know how to even fix those, because I just saw this quick fix on a commercial that said you can put your cell phone on there and put your utilities. So yes, you can see a boost. This is what I don't like. They use a third-party company to have access to your bank accounts because they want to see that you're making payments to these people. Because guess what? Because it's not credit, it's just bills that you're paying on a monthly basis, it's not going to report on your credit report as someone that you borrow money from and pay back. So they have to go through this third party to say, well, how else are we going to know that they're making on-time payments with these things? We have to check your checking account. If you're okay with that, then listen, sign up all day long. I'm just here to tell you, I'm not comfortable with a third party having access to my bank account, seeing everything that I use my money for. So you can look for Netflix and look for AT&T and look for T-Mobile. No, thank you. Also, again, it only boosts Experian. Thirdly, when lenders pull your credit report, those things do show up on the report as Netflix, as Hulu, as, whatever gas company or whatever. So a lender can see, all right, your score might be great, but it's only really because of these things that really don't show me that you can borrow money and pay people back. So you're still a risk to me. I don't care how great it boosted your score. Because again, it's not about the score only. It's about the information on the report, because that's where the score comes from. So it could boost your score, but still can handicap you because you still can't make the moves you want to make because the lender said, I don't care that your score jumped. This is like stupid to me because you didn't borrow money to pay Netflix. You're not borrowing money from the electric company. So, I wouldn't say don't, but if you ask me specifically and personally, I'm going to say don't. But I would say if you want to, go ahead. And there's some things I would tell people, no, absolutely don't. If you want to do it and you want to just feel a little bit of motivation from seeing some increases, go ahead if you're comfortable.
I also saw a commercial about, if you buy Netflix, that can increase your credit score from them too, which was something I was like, really? I don't think so. But
I'm
people
not a
are
fan.
buying it. Like all my family members are like, because they know I have like a blog about money. They come to me and say, well, it says here. I'm like, oh, that's not really how it works.
It's all marketing. It's all how many people can we. And when people don't understand, and I like to say the word ignorant because that's what it is when you're ignorant to credit. Companies, they capitalize on that. Like right now, everything's keto when it comes to diet. So the grocery stores are like keto everything, and I'm like, you didn't see half of this stuff last year, but they know they see everyone posting about it, so they're capitalizing and they're charging an arm and a leg for stuff you can make at home yourself that are keto friendly. But they know that's the way of the world. We want fast. We want convenient. I don't want to make these keto muffins because I can just go to Safeway and buy them and just have them, or the grocery store, whatever. So it's just all about people just grasping at whatever's quick, whatever's easy, what's going to give me the biggest benefit. But that doesn't mean in the long run it's going to benefit you. It's benefiting you for right now. And so that's why I'm big on educating people. Like, I'm teaching you for not just right now, but for long term. How do you maintain good credit? Not just how do you boost it. So yeah, I'm not a fan. But again, I tell people, take the information and do with it what you will.
Now, let's say that you already have a negative credit history. Like you've already done some stuff to mess up your money, and maybe some of that is totally a personal responsibility thing, like you just messed up, but maybe some of it is just drawing a bad hand. Maybe you lost a job and all of a sudden couldn't pay your installment loans. Maybe you had a medical thing come up and you couldn't repay the debt because you weren't planning for it or anticipating it. When that impacts your credit score and your credit report, my understanding is it can make things real hard. Like everything from finding an apartment, maybe even in some fields, finding a job, finding
Oh,
an
yeah.
affordable loan. So if you are already in that situation, what are some ways that you can rebuild your credit history when maybe I don't know, like the Cadillac of credit products isn't available to you?
I feel like you're talking about me right now. That is how I got started doing this in the first place. I'm 42 years old right now, but when I was 22, I was diagnosed with stage 3 cancer. Okay. Had to go through chemotherapy, radiation treatments, had tons of medical bills and collections. And that's when I started to learn about what a credit report and what a score was, because I would get the collection letters to say, we've reported this on your credit report. And I was like, oh my what? You know, I've never heard of that before. I knew what a credit card was because when I was younger, I saw my mom using credit cards. The biggest issue for me was, what do you mean this is on my report? And how is it a bad thing? Is it a good thing? How am I being affected by this? And so I started looking at, where do I pull credit reports? And then I saw other things that were on there, like when I bought my car and like credit cards that I used and didn't pay back. And I was like, whoa, like where did this come from? How do I fix this stuff? So I just started researching. Back then there was no Google. Okay. Yes, I'm old. So I was on Netscape and I was on Yahoo, like trying to look up, like, how do you fix these things? And if I pay it, what happens? And how do I boost my score? So that's where all this knowledge came from, like literally when the cancer, right? And then it was like, all right, they say you can start with the secured card. I'm like, okay, what does that mean? You know, how is that different than the card my mom uses where she has to pay everything back at the same time, not like in months? I was like, I can't afford to do that. And so just really researching, but it's all about, I figured out where I was starting. I pulled my reports. I saw every collections. I saw this credit cards, non-payment charges, all that stuff. And then it was, well, what does all this mean? So then I looked that up. Then it was, well, what can I do to make it better? Start out with a secure card. Well, what is a secure card? Well, you have to put down some collateral. You still have to apply for it. And they're going to say, we're not going to deny you, but we will accept you, but you have to put down collateral. We're not comfortable giving you an unsecured card that you can just use at your, will. So I got a $300 Bank of America credit card. And they said, after 1 year, if you do well, we'll unsecure you. And I was like, awesome. But in the meantime, I was using it. I was paying on time. So then I started getting Capital One offers and Orchid Bank, so other credit cards. And so I applied and I got approved. And so I just started using those the same way. Bank of America became unsecured. It was still only $300, but Capital One said, we'll give you one for $750. I was like, $750? Wow. And then $750 became $1250 because they gave me an increase and I got another card. And so I literally just started building. In the meantime, while I was rebuilding, I was repairing. This is so critical. People don't do them simultaneously. They just say, I'm gonna repair, because I just want to get all the bad stuff off. So once you do that, or it may never come off, it's like, well, now what? You have to be rebuilding as well. Lenders don't want to just see that you don't have anything negative. They want to see that you have positive payment history, you have positive accounts. So that's a big misconception. I know we're going to talk about that later, but I want to say people think having good credit means nothing negative. I have a client who has 0 negative items. Her scores are in the 500s. And while I was going through everything I went through, I was able to get my score up to about 742 at one point in my life. But I had 15 late payments on there. I had 3 collections on there. And people say, well, how is it that you had those negative things and your score was still great? Because all the positive that I built end up countering that negative. And so that is what's critical. If you have nothing but mostly negative in your one little measly credit card that you just got to rebuild, you're going to look less favorable than someone with a lot of negative, but a lot more positive. So that's the big factor, right? So yes, I was dealt a bad hand. Cancer hit me, divorce hit me, homelessness hit me, autism hit me. And it was, then I lost my job. I didn't even talk about that. And so I was fired unjustly, had to fight for my unemployment, and I didn't have a savings. So I know we're talking about credit, but let me just throw this bug in you guys' ear. I knew better, and I still ended up in a rut because I had no savings. I had a great job. And because I made good money, I never saved because I said, if I want something, I can just go out and buy it. I don't need to save money until I didn't have the money. So I racked up $55,000 to $60,000 in credit card debt to just stay afloat, to pay the car, to pay insurance, to pay for groceries, to pay for gas. And so my learning experience was, don't you ever not have a savings account at least 6 months to a year worth of your expenses. So if something happens, you're covered. That was a hard lesson for me. And it took me 7 to 8 years to finally pay all of that debt off. So I say that to say as well, too, if you're looking for the microwave fix, that ain't it. But eventually the fix comes. Eventually your goals are met because the time is going to pass whether you do something with time or not. So I could have said, it's going to take me 8 years to pay this off. Well, 8 years passed anyway. So 8 years with the debt or 8 years debt free. So it sucked to pay off all that much money because I was throwing $5,000 at a time on the card, $2,000, $8,000. My last card, I paid $14,000 all up front. And I wanted to cry for good reasons and bad reasons because it was like to give all that money away at one time. But I was like, it's not my money. And I had to realize that it's their money. I borrowed money to pay for things. So pay them, people, and be done with it. So I did. So I have no credit card debt right now, but it took a long time. For some people, it doesn't take a long time, depending on what your starting point is. If you have 9 collections, 18, credit cards that are maxed out and 100 late payments and 5,000 increase, it's going to take you longer than someone that's like, I just got a couple things on there. I just really need to work on rebuilding. So when people say, well, how long is it going to take me to fix my credit? Depends on what your starting point is and depends on if you're actually going to do the work that I tell you to do. Right? You can say, hey, GPS, I'm trying to get here. And they can give you all the routes to go. And you can decide, you know what? I'm going to go the way I want to go. I'm not going to follow this GPS. Well, guess what? You might still get there, but it might take you a long time. The GPS is saying, I told you in 42 minutes, you can get here. You wanted to take an hour and a half because you wanted to make a left when I said make a right. I told you make a U-turn and you wanted to take this detour. Follow the plan. So that's why people do sign up with me because they're like, I'm reading your group. I'm reading all over the internet and I'm trying to piece it together. But if you can just give me a map based on where I'm starting and where I want to go, I want to follow exactly what you tell me to do. And that's where my coaching sessions come in.
Looking at kind of like you're talking about, like people want quick fixes, right? So if you find yourself in credit card debt, especially now, I feel like with the internet and like all of these sites save these cookies and know our life problems and want to advertise to us, and they do so successfully sometimes. I'm wondering, people might be seeing if they're in a bad spot with their credit, they might be seeing offers from places like debt settlement companies. And then on another side, completely different service, credit counselors. What are these services? Should people stay the heck away? How should people interact with these services if they choose to do so at all?
So yeah, and I want to add credit repair companies, and I did air quotes for a reason. And I'll start with the other ones, and I'll end with credit repair. So credit counseling, you can call yourself whatever you want, credit educator, counselor, coach, as long as you are counseling people, which means they're coming to you with a problem and you're telling them what they need to do to fix it, different measures they need to take, different interventions, why they should take these measures, because the why is way more important than the what. I can give you a whole roadmap of what to do. If you don't understand why I'm telling you to do it, I've done you a disservice, right? If you are going to legit credit counselors with people who are well-versed in credit, because there are people out here that say they fix credit and they coach credit and they are giving all of the wrong information. I see it all the time on Instagram. I see it everywhere where people say, look at my client. I helped them boost their score 50 points in just 30 days. But what screenshot did they post? Credit Karma. And I'm like, you call yourself a credit expert and you're posting Credit Karma scores? And then what do the comments look like? Ooh, help me, help me, help me. Because they don't understand that Credit Karma is crazy because the person who is the expert said, well, Credit Karma is crazy. So it is difficult right now because everybody and their grandma says that they fix credit. And they don't know what they're doing. So, vet the people that you are hiring. And that's kind of hard to do when you don't know the information yourself. So you're like, vet them how? I guess they're giving the right information because they're experts. They got tons of clients. So it's really hard in this industry, even for me, to try to rewire people's brains and try to change their psyche or kill all the misconceptions or kill the Lexington Law. I'm sorry, I'm gonna put names out here. They do credit repair, right? So pay us $99 a month and we'll fix your credit. We'll get rid of the bankruptcies, the student loans, the collections. So if you type credit repair in Google and click images, every flyer is going to say the same thing. We get rid of all the bad stuff because people think if nothing there is bad, then I'm going to have good credit. So then people come to me or my group and say, I did hire a company and they got all my collections off, but my score still sucks. Did they teach you what to do to build your good credit? No, because you're not talking to anyone. You're paying them monthly. They're just writing dispute letters, hoping things fall off because you think that's going to be the key to good credit. And they're getting rich. You're poorer. You could have taken that money and actually paid some of the debts that you owe, but you think getting rid of them is going to make you have good credit. That is one reason why I say stay away from credit repair companies. Another reason is that they don't educate you. So you just walk away with no knowledge, just fingers crossed, hoping that things fall off. So you wasted. Sometimes I hear in my inbox between $700 and $4,000. I've heard that people have wasted money with credit repair companies, or their friend who said, I can fix your credit, girl. Just pay me $900, pay me $1,200. And they're like, check written, because you're telling me if I just do this, you can give me good credit. Say no more, say less, help me, right? So that, or, and this taps into one of the misconceptions, they think if I have nothing negative on there and you get rid of a collection, then the debt is gone, right? People think there's correlation between something reporting and something being owed. So someone came in my group and said, I paid a company for, I don't know, about 9 months. They did get some collections off, but then I got sued and they garnished my wages because I thought if it's not reporting, yay, I don't owe you. Like, no, it just means it's not reporting. So that saddens me. So that what now they were taking your money from your check and you had no control over that just because you weren't informed, right? Because they weren't here to teach you. They want to just take your money. They know you're ignorant and they say, hey, let's make all the money we can. And you don't even know what they're saying in those letters because they're not sending them to you for you to send. They're just mailing them off. And you're like, well, I'm paying the experts to do what they're going to do. You don't know what they're writing. You don't know what they're saying. You're just like, please, please, please get rid of my bad stuff. That's another reason why. And anything that comes off your report can be put right back on. So I do have the story of the woman who said 11 of my collections were deleted and 9 of them came back. I said, oh, that's interesting. Did you get a refund? She's like, no. I'm like, of course you didn't. Because they're like, we did our part, whether it came back or not. I said, but let me ask you, did they tell you what you could do in that case? She said, I didn't know there was something I could do. I said, exactly. They're not educating you. So you're walking away with no knowledge and more broke, and then credit most times not fixed, right? So I would say stay away from credit repair companies unless they're going to be educating you on the ins and outs of how credit works. Debt settlement companies. You have tons of credit card debt. You're in over your head. You're making payments. You're not making headway. The interest is high. I don't know what to do. I feel like I'm at a loss. So these credit debt settlement companies say, you sign up with us. We will negotiate. We will lower your monthly payments. You pay us and we'll pay everybody. You don't have to worry about it. You pay us one check and we'll disperse everything. Well, let me tell you, in order for them to negotiate on your behalf, you have to have the negative accounts. So what they tell you to do is default on everything because that's how we can get you the best negotiation. So you had good credit, just high balances, but now you've defaulted on things. So now you've made your credit worse. Okay. Here's the second thing. Well, they have to get paid as well. So this one lump sum that you're paying them to divvy out, they're taking their money first and then divvying out your money. So you're paying them to do what you can do yourself. Here's what you can do. Every credit card company has hardship programs. You just need to call them. The companies don't know you have hardships unless you call to say, I have hardships. But the biggest thing is people don't want to face their bad credit, right? But you not looking at it is not going to make it go away, right? You not letting them know you need help is not going to get you help. They're not going to call you, hey girl, how you doing over there with your debt? You need some help? No. So you have to say, I need help. Do you have any assistance programs or hardship programs? Well, yes, we do. If you qualify, what we'll do is lower your monthly payments, lower your interest. We will close your cards because we don't want to help you pay down your debt and you're running it back up, but you can always rebuild your credit. So if they have to close your card, close it out. You did bad with it in the first place. Start from scratch because the credit cards you can always rebuild. Once you default on the card that wasn't negative, now you may have had them paid off, but now you have negative stains on your credit report that you didn't need to have, right? So I don't suggest debt settlement companies at all because they take their cut. They want you to default first, and it's a slow drag. You're paying them all this money, and they're taking part of it and then divvying it out when you can take all of that money and pay the people. But just call the companies directly. That's like my biggest thing. But this is information that people don't know, which is why I love to educate.
Definitely, definitely. And now, a word from our sponsor. Do you struggle with sleep at night because your little one won't or can't sleep? Do you worry your child is unsafe during the night because they aren't sleeping? Have you ever found your child wandering in the middle of the night when you thought they were safe in bed? If you answered yes to any of these, we'd like to introduce you to The Safety Sleeper by Abrams Nation. Created by a mom of a young child on the spectrum, The Safety Sleeper is an enclosed bed system designed to keep your loved ones safe at night. The Safety Sleeper zips around a standard mattress. Some people say it looks like a tent. A metal frame, padding, canvas fabric, and zippers make it sturdy and comfortable. You can zip your child into bed and they are safe, secure, and prevented from eloping. Because it was created by a mom, the Safety Sleeper is not only durable medical equipment, but it's also stylish, customizable, and completely portable. Our friends at Abrams Nation want to help you get that rested sleep you've been missing. They're also running an exclusive giveaway just for Mom Autism Money listeners, allowing you to try the Safety Sleeper out for free. To learn more, visit safetysleeper.com/MAM. That's short for Mom Autism Money. Again, that's safetysleeper.com/MAM. And kind of along those lines, if you've gotten to a point where things are really bad, some people might start thinking like, oh my God, maybe I should just file bankruptcy. And that's not, there's different types of bankruptcy. It does affect your credit a lot. Maybe there are some situations where it's a good idea, but I feel like there's a lot where you can kind of work through things and fix things for the better too. I'm wondering if you might be able to like give us some examples of times when maybe bankruptcy is actually a good idea, how it impacts your credit long term, and how to kind of make that decision.
So I hate this conversation, not with you guys, but with people who are considering it because they think that is just the quickest way to just wipe the slate clean, start over, just start over, and just I don't want to go through the work. It's too much. I'm overwhelmed. So people do it for different reasons. The people who are like, I am overwhelmed. It's too much for me to handle. I don't want to deal with it. I just want it wiped away. Those are the people who end up filing twice. I have a client who filed twice because you didn't learn anything from it. You just wanted to start from scratch, right? And just have a clean slate. There are people who actually say, well, my spouse passed away. He was the breadwinner. I lost my job. I'm in one of those states that say if that was his debt, that is your debt. I have children. They can. So those people, I'm like, you know what? For your sanity level, let's go ahead. Because if you don't have the funds, you're going to find yourself in a worse situation as the years go by. So let's go ahead and figure out what we can do. The people who run up a lot of credit card debt because they were overspenders or they're shopaholics or I shop when I'm stressed or I'm, that's my retail therapy or, I was young and dumb. Okay, well, now you're older and trying to be smarter. Let's learn what to do. Don't look for the quick fix. Because, yeah, there's some people in my group that say, I'm thinking about filing, but I don't know. Is it bad? Some people say it was the best decision I ever made. And that could be possible. It could be for your level of sanity. You were like, I have to do something or I'm just going to jump off the bridge, or whatever. But it's not the first course of action. It's not for laziness. You don't want to learn and do the work. It's not for people who have money, but you mismanage it. So you think you live check to check. No, you really don't. You don't budget and you blow your money because you spend it on fast food or whatever and you're not paying attention. So I always like to go to let's talk about why you're in this position. Like, how did you get here first? Let's talk about that. Because that determines which way you need to go. And if it's all about, I was just making dumb decisions, then you'll feel much better about yourself saying, you know what, I took some time to say, you know what, you did this to yourself, own up to it, accountability, learn it, pull yourself out. But for the people who say, you know what, I'm not going to make it in life if I don't do this. I won't say don't. If it drives you to that point, I wouldn't say don't. But you still have to qualify. So it's not like the poor young girl who came in our group saying she has $4,600 in debt and she wanted to file bankruptcy. We were like, oh, you poor baby. If you don't go somewhere, sit down and figure out how to budget and pay that debt off. But she thought 4,600 was like, we're like, people have $50,000 in debt, so but that's because she thought, I don't know what to do. I'm mismanaging my money. I just want a clean fix. We're like, you're not going to get approved for bankruptcy with less than $5,000. So it's really about also understanding what is for you and what it's not for you. Bankruptcy is not always the answer, even if you qualify. And bankruptcy is sometimes the answer, but you don't qualify. So it depends. So let's talk about chapter 13, right? Chapter 13 is designed for consumers who say, I have regular income and I can pay back a portion of these debts. I'm not trying to, have a clean slate. I'm not trying to get out of paying. I can do that. So it's a 5-year plan. You meet with the trustee and they come up with a plan to get the debts paid off, right? So you're not paying everything back. It's a percentage and then it's split up over years. And so it's a 5-year plan. So you're not even discharged until after 5 years. So, but it lasts on your report for only 7 years. So it's better because it doesn't affect you as long, and it's easier to qualify for. But they come up with your qualifications based on your expenses, the type of debts you owe, and your income. If you have non-dischargeable debts like student loans or child support and stuff like that, then that's for you as well. If you have a house or car, and you want to keep the property, there's a way to do that with chapter 13. But chapter 7 is the one that people really want because it's basically saying everything's clear, you're good to go, but it's much harder to qualify for. There are times where you don't have a choice in whether I can keep my car or keep my house. You're saying, I can't manage these debts. I'm releasing it to the government and I'm starting over. Yeah, you don't get a choice. Like, yeah, keep this, but keep that. You can't have your cake and eat it too if you want the thing that's going to be the most favorable option, right? This one works well for people that really have low income or no income, right? Or no assets. Let's see. Oh, that stays for 10 years on your credit report. So even though it's not a 5-year plan and it's discharged pretty rapidly because you're just getting rid of everything, it stays for 10 years. That's a really bad stain on your credit. But I will say, and if you don't qualify for 7, then 13 will probably be the best bet for you. But I will say, don't think that it is a death sentence, right? I'm never going to ever have good credit again if I file. People have bought homes 2 years after filing bankruptcy. People have been able to rebuild their credit. And one thing I can say about FICO, and I meant to say this when we were talking about scores earlier, one benefit is that FICO says, you know what, we know things happen and we know negative marks show up. But we will tell you that the older that they are, the less weight they hold because time will be passing. And the idea is that as time passes and those are aging and weighing less, that you're building more and more. So that's another thing with me where I said I had that 742 with 15 late marks and 3 collections because they were aging. But in the meantime, I was building so much. So people pulled my report and can see those negative marks, but they were like, we don't even care about those old things. Look at what she's been able to do in between the time. And that's why I say it's important to repair and rebuild simultaneously so they can see I'm trying to make better moves while I'm fixing these things. So that's the idea. So that's like you would not move into the house you desire because some negative things pulled up on the inspection. You're gonna move in and then fix the things, right? Like it's like I want to wait until all these things are fixed, then I'll move in. No, you close, you get that house, and then you fix everything. And so it's the same way with credit. Pull it, inspect it, what needs to be worked on, rebuild while you're repairing. But again, bankruptcy is not a death sentence, but it's also not the first course of action that you should take because you're like, I don't want to deal with this because you haven't changed your mindset. That means you have this mentality that I can run up debt. They'll get their money when they get it. Oh, I'm in the bind, I can't pay. I'm going to wipe my slate clean. You're going to end up right back in the same position because you haven't learned how to rewire your brain and be disciplined and look at how you got here in the first place. It's really about a mindset shift. Back in April, which is Financial Literacy Month and Autism Awareness Month, I did a 5-day credit challenge. And I know on day 1, they wanted to just start getting to the meat and potatoes, like, okay, talk to me about these collections and how to boost my score. I said, no, day 1 is about money mindset. Before you learn anything else, let's talk about why you think about money the way you do, why you pay people back the way you do, why you think you don't have to pay people back, why do you spend the way you do? Is it because growing up you didn't have? So you say, when I become an adult and get some money, I'm going to buy what I want, despite whether I can afford it or not. Or I didn't have growing up, so I don't want my kids to be without either. So I buy them whatever they want because I don't want them to be struggle kids like I was. That's not the way to, because you're teaching them the same thing. And they're going to pass that to their kids and their kids. So why do we think the way we think? Me, I'm the opposite. I was the struggle kid and I didn't have. So I'm afraid to spend money now. Like it's stuff that my husband's like, babe, you need it. I'm like, what it costs? He's like, you have the money. It's like I'm holding on because I don't ever want to be back in that position again. So that's also not a healthy mentality to have. And I'm being very transparent and I'm working through that, Or people addicted to sales. I know people that just spend hours in the mall browsing clearance racks and sale racks and they're using credit cards. And I say, well, if you're not paying back in full when it's due, did you really catch a sale? Because you're paying interest. So now you probably paid the regular price or more than the regular price by the time you paid off the credit card. So it's really about the mindset. Like, I can't even express that enough. Out of everything we discussed today, we have to circle back to get your mind right first, because you have to want this bad enough to say, I'm going to make some changes. Not let me just learn this information to fix my credit, because you're going to end up in the same situation. Some people don't like to hear it. I don't want to make these major changes. Well, that's fine. Talk to me next year when you're like, hey, Chante, I'm still in the same boat. I'm like, yeah, we talked a year ago and you told me you needed help and you never moved forward. I had 4 people reach out to me this week that said, I'm ready now, Chante, my credit sucks. And I scrolled all the way to our first conversation, January. It is now September. One lady, November 2019, she commented on one of my posts, I'm ready for my house. I said, you reached out to me almost 2 years ago. You never followed up. So she inboxed me, I'm ready now. I'm like, we'll see. So I can't want it more for you than you want it for yourself.
For sure. And that's another thing I think too, like when you're rebuilding that credit, like that rebuilding process takes time too. Like it's not just like a magic wand that you wave and it's like magically everything's fixed in one day. Like you might need 2 years to rebuild your credit to get to a point where you qualify for a rate on a mortgage that you like.
Also in the media or influencers, when you see I pay X amount of money in 6 months or like this, when I tell them my story, they're like, well, it's not realistic. It was realistic to me. It took me years to pay off my debt, because I did it both ways. But from experience, they want easy, fast, and they don't want to work for it. They just want it easy and fast. And I agree. I'm sitting here, I'm like, like, where have you been, Shanté? Like,
Fix my credit.
I needed you like 10 years ago. I'm my 20s too. I was like, here. I needed to have my Jordans. And I was a single mom too. And it was when I hit like rock bottom. That's when I started searching. And
it's disheartening because, I could be frustrated with my mom. Why didn't she teach me about money? Why didn't she teach me about credit? And I'm like, can you teach somebody something that you don't know either? So I couldn't really come down on her. What she did teach me was how to shop around for the best price. I remember being 9 years old. I wanted a pair of K-Swiss so bad. They just came out and I said, Mom, everybody at school has a pair. And she was like, okay, well, we're not going to just go and buy them. You need to call around and find who has the cheapest. Now, there was no internet in 1988. So I had the yellow pages and I just went to like shoe stores or retail and I'm looking, and I lived in DC, Northeast DC at the time. So I'm looking at all the shoe stores near me and I just make calls. Hi, I'm looking for a white pair case with size 4 high top. And how much? $54.99. I wrote it down, wrote the store down, called the next store. So I finally found some that were like 45. And I was like, wow, this is like cheaper. And I told my mom and she said, now do you see why you don't just go into the first store and buy it? So when I say from 9 to 42, that is stuck in my brain. I will look up a coupon code. I will find free shipping code. I am not paying full price or just paying for the first thing that I saw, right? So that's the money conversation we had, but nothing else. And so I appreciate her for that. But I made these flashcards years ago called The Fundamentals of Finance, Making Sense of Money. And it's for kids because they hear us talk about budget, economy, taxes, credit score. They're like, I don't know what any of that means, but they need to start learning what that means. Because I used to hear my mom say all the time, oh, I got bad credit, talking to her girlfriend. And I'm like, I don't know what credit is. I know it's bad, because she just kept saying bad credit, bad credit. Then I learned the hard way. Let's not let these kids learn the hard way. Not the story of when I was 18, I made dumb mistakes and now I'm 30. I'm like, what have you been doing since 18 to 30? Like you haven't learned anything, what's going on? But no one's teaching it. Schools aren't teaching it. Colleges aren't teaching it. And so I made this. And then I said, all right, all these kids are graduating. They're about to hit college and they're going to go on campus and they're going to say, would you like to get a free mug? Sign up for this Discover card. And they're going to say, free money. I'm like, no. Let me teach you now. So I made this. It's all about credit building and paying interest, because a lot of those kids also get cars and they see 14% interest. They're like, whatever, I just need a car. And then they say, dang, that was a lot of money. I paid triple for this car in the end because my interest was so high. I'm teaching them how to calculate interest. I'm teaching them how to calculate what their monthly payment could be. I'm giving them the formulas. I'm teaching them about the credit bureaus, credit scores. Everything we talked about today is in this for teens and young adults because nobody's teaching it.
Yeah,
It's
it's one of
bad.
those things you just assume, like, when I'm a grown up, I'll just like know all this stuff. And it's like, how are you going to know it unless you actively go out and try to learn it?
Yeah.
That's one thing that I kind of have a question about is our audience is moms, right? So we've all got kids. Maybe some of them are approaching age of majority where like they're going to want to be able to have good credit or a good loan. Is credit something that we should work on building with our teens in their teenage years, or is that something we should kind of just wait until like they're a little bit older? Should parents be proactively doing that part of the equation, or should they just really be focusing on teaching the basics?
I think for young kids, you just need to talk about earning money, spending money, saving money. Because kids get money when they're young. They get birthday money, they get allowance and stuff like that. So it's like, let's start giving kids the responsibilities that we weren't able to learn and that hit us in the face when we became young adults, right? And teenagers. So kids may not have jobs, but they still get some type of money. So teach them, don't spend everything. Start saving. Let me teach you about saving. Because as a kid, you're like, as soon as I get money, my mom gave me money to go to the ice cream truck. $5 went a long way when I was young. And I wanted some chips. The chips were 50 cents. I paid my $5. I got my change back. What did I do? Okay, now what can I get with this? And then I got a pickle. And I was like, now what can I get with this? And I got some candy. It was like I spent all the $5. And it was like, why? Because you could have bought your chips, paid $4.50. And then the next week when mom gave you $5, now you have $9.50. But we don't think with the end. We think right now, I wanted to blow the whole $5. So it's teaching kids delayed gratification. Do you know? You keep asking mommy for this PlayStation game. Okay. And you say you want it and you wouldn't mind having it for Christmas, but you can have it sooner if you take the money that you get every month from your allowance and save it, save it, save it. Think with the end in mind. If you spend it on your friends or go buy candy, then it's going to prolong you getting that game you want. So it's like, that's the conversation we should be having with the young kids. Giving them their own debit cards. Give them autonomy. We always say we want kids to have responsibilities, but we never give them responsibilities. Like, when do they learn it if we don't give it to them?
That is huge. Like just doing those things like hands-on every day and just practicing that while they're in your care still, and you are still there to provide them with advice, whereas just sending them off into the world like good luck, and they might not feel comfortable coming back home if they've never talked to you about that
Yep.
before. If we're talking about specifically building credit for
Okay.
kids, is that something that parents should worry about, or is that something that's just kind of like let them do it when they're like help them with it when they're 18? You don't really need to worry about it when they're a minor. I've seen like mixed opinions on this, and I'm just not sure what the right way to go about it is.
So there's really no right or wrong, but there are definitely a lot of mixed opinions. Some credit card companies allow you to add kids as authorized users. And what that means is they are authorized to use it, but that don't mean they have to. So that means you put them on your account as authorized user. Any information about that account is going to go on their credit. So not your whole credit, because people say, well, I have bad credit, but if I add them as an authorized user, is it going to mess up their credit? I'm like, remember, it's only what's on their report. So if you add them to this card, only that card's information is going to be added to that report, not your whole entire credit history. So some credit card companies have a minimum age and some don't. So there are people who add their kids at age 5. I'm like, I think that's a bit ridiculous. But, I would say getting closer to that age where they're going to be stepping out on their own, 15, 16, 17, go ahead and add them. Don't add them if you have late payment. Don't add them if you're not using the card properly, because that's going to do nothing but set them up for failure. Then as soon as they turn 18, before they get a credit card, they should already understand how they should be using credit before you give it to them. What happens is we get credit cards and then we're trying to learn how to use them. No, they should understand how to use them, how they work, understanding the billing cycles, the due dates, the utilization, all of those things that matter. Growing up, my first credit card, I didn't know anything about utilization. I just was like, I'm going to use as much as they gave me. As long as I pay back on time, that's what matters. So I'm like, oh, I shouldn't max it out. Okay, I'm sorry. I didn't know that because no one taught me. So yes, I would say as kids, go ahead and start them. But make sure you're learning so that you can teach them properly what to do when they get credit cards. Because what we don't want is them to get credit cards and look at it as free money. Look at it as, I can just swipe for stuff that I'll pay them later, whatever. And if I don't have it this month, they'll get it when they get it. They don't know a late mark is going on their credit report because of that. And people can lose 20, 30, 50 points from one late mark. I've been there. So it's really all about learning before you make those moves. But yeah, I don't think you need to be adding a 12-year-old to your account. Can you? Yes, but I don't think it's necessary. So yeah, I have mixed opinions, but there's really no right or wrong way. If that's what you want to do, great. Because it does help them when they do turn 18 and they finally can check their FICO score one generate. They already have good credit because they have that history. But on the report, it shows as authorized user. So a lender can pull that and go, we know that's not yours. So you should be using that as a stepping stone to start building your own credit. So don't just rely on adding yourself to all mommy and daddy stuff and thinking I'm going to be okay, because you may have a great score, but you don't have a healthy profile.
Definitely, definitely. Let's talk about what are some of the most common myths and misconceptions people have about credit scores, because those can be really damaging. If you're operating off the wrong information, you're not going to get the right results.
Yeah. Very, very. That's what I was saying. You got to clear up the misconceptions and stuff before we can start helping you with your credit, because you got to get all of that out of your brain. Because I've always heard, I have a whole book called Credit Myths and Misconceptions. If I was able to write a book on just that, there's a lot. Now, I still pulled the most common ones because we don't have time to go through the whole book. But yes, I will say checking your own scores will hurt your credit. People think that, because they know that when you apply for something and they check, there's an inquiry, you may take a hit, but you can check your own scores every single day. Please don't check every day. You're going to drive yourself crazy. But you can check every day and it's not going to hurt you. You can pull them as many times as you want. Paying on a negative debt will restart the time frame that it stays on your report. That's probably the first misconception. People say, don't pay that collection because it's going to be on for another 7 years. I say, no. The reporting period for negative items besides Chapter 7 bankruptcies is 7 years, and it doesn't matter what activity happens, it falls off in 7 years. So that's a big one that people think.
With that one, I have a really quick question. I think that probably that misconception comes from like the statute of limitations on debts in different states. So I know that it'll come off my credit report and it won't necessarily affect my credit report. But if I owe somebody money and I didn't know about the debt in Pennsylvania here, it's 4 years on medical debt. And so if they come at me after 4 years, like at the end of that 4-year period, and I pay on it, then that restarts the legal collection period where they're allowed to legally come after my money. But that doesn't mean that my credit report is affected. That's my understanding of it. Is that totally off base?
No, not totally. So that's one of the misconceptions, that they think the reporting period and the statute of limitations are the same thing, right? And so the statute of limitations is what you said, the time frame they have to legally pursue you for the debt. That can be shorter than the 7-year period. I'm in Maryland. Our statute of limitations is 3 years. That means after 3 years has expired, yes, I still owe the debt. Yes, it's still reporting because 7 years hasn't passed, but they can't sue me for it, right? And once it expires, it cannot restart. Now, there are things that can restart the statute of limitations while you're still in the time frame. There are like 7 things that you can do that could possibly restart it, but the 7-year reporting period doesn't restart, and the statute of limitations and the reporting period are not the same thing. So there's something called a zombie debt, where it's been more than 7 years, it's not reporting. They can't come after you legally because the SOL has expired. Yes, you still owe it, but some people look at that like, you know what? I'm going to turn a blind eye because it's not on my report and you can't sue me. And I tell people, you know what? You haven't heard it from me, but yes, do that. Like, I'm all about taking care of your responsibilities, but if it's a zombie debt, and it's stressing you out, you have other debts that you could be focusing on paying that's affecting you, leave that alone. But I don't like to tell people that because it sounds like, well, she said I don't have to pay my debt. I'm like, no, I didn't say that. But that's kind of like, that's what it is. So yes, the SOL is the time frame they have to sue you. That can restart, but it can't after it has already expired. So like you said, if I'm at the end of that 4 year, if you're at the end of it, but it hasn't expired, yes, paying on that is creating activity and it can restart. Now, it's up to them whether they want to restart it. They can say, you know, we don't care, whatever. Or they can say, nope, that's another 4 years now of us being able to come after you legally. Once it's off and once it expires, it can't restart. So if 3 years has passed, I paid on it, they don't open it back up for another 3 years of being able to sue me legally, like I'm paying you, you know. So that's one of the things. That's a misconception.
Thank you. Because that's a really good point. I never thought about that like you might mix up your credit report and your legal liability are not the same thing. They're not measured the same way. It's totally, they're two separate things to worry about. So
not even the legal liability, just like the guy, he paid the company who got collections off and he thought I don't owe. And I'm like, just because it's not reporting doesn't mean that you don't owe. There are people who don't report. True transparency. I got a ticket in DC some years back. And I got the letter in the mail because I said, I'm going to pay you when I pay you, whatever you get on my nerves. I did stop at the red light. I did. And so I got a ticket and I was like, whatever. And then I got a collection letter and I was like, you can't be the credit girl. And now you have a collection on your credit report. But when I ran the check, it wasn't on any of my reports. I checked the next month. It wasn't on any of my reports. I tell people can report to all 3 credit bureaus, they can report to 1 or 2, and they can report to none. Does that mean you don't owe because they chose not to report? No. So it's the same thing as something did report and it came off. That doesn't mean now the debt is gone. It means it's just not on your report. So just like your legal liability has nothing to do with reporting, you owing them has nothing to do with the way it's reporting. And that's a big one, because that's why people pay these companies all this money to get things off, because they're like, I don't want to pay them. I'm like, no, you still owe them. Now you could be lucky, it can come off and the company never comes after you again. Great. But if they do, they're well within their right to do so. Paying off a collection increases your scores. That's a big one. Dispute everything. When people are trying to rebuild their credit, they just like dispute everything on your credit report and start over. They end up disputing things that were actually helping them. So let's just say you have a student loan or a car note. You paid it for 5 years. It's paid off. You have great positive payment history. It shows closed and paid in full. It's done. So now you're just going to now have that positive history just aging and aging on your report. But people think it's closed. It needs to go. So they think only your credit report should have open and active accounts. And I say, no, it's a history of how you've managed credit. I want somebody to see, for years, I've been able to manage credit. Not I look like a newbie because I got rid of all those clothes and now everything that's open is just open a year ago. You got rid of all of that history. And remember, length of credit history is one of the components of how scores are calculated. So a lot of people think just dispute it all. That's a big misconception. The last one, if you pay, you don't have to pay a collection agency, because your original contract wasn't with them. It was with the original creditor. So if Capital One decided to sell it to Enhanced Recovery, don't pay them because you don't have a contract with them. I said, you don't have to have a contract with them. Guess who does have the contract with them? Capital One. And guess what happened when you sign on the terms and conditions that nobody reads because it's like 18 pages long and we just like scroll down to click accept because we want the credit card? It says you have the right to sell your debt to a third party if you default. So no, you don't have to have Enhanced Recovery doesn't have to know who you are. Capital One knows, and you didn't pay them, and they're going to recoup their money somehow. So they sell the debt to a third party, and then they got some money, and now you owe the third party. So this concept of your contract wasn't with them, I'm like, okay, go ahead and think that. And then they come back to me like, I got a summons to go to court. I'm like, well, you said you didn't have to pay them, So it's really clearing up, and I really wanted to touch on that because I see this meme going around every year. And it's shared hundreds and thousands of times. And I read the comments and people think that this person who is a credit expert said, don't pay this collection because you don't have to. And people go, great, because I have tons and I don't want to pay. All I can do is give you the real deal. I'm not here to discourage you, but I don't want you to be blindsided when something happens and you believe some misconception that you read in some group or some credit expert on Instagram said.
No, for sure. And those are all super important ones. Like some of those misconceptions are ones I've had myself in the past before I learned more. And some of them are ones, like you said, that I still see people out there like tweeting or liking or resharing. And it's like, what? No, stop.
I have a blog and it's mostly money and it's a community. And, I'm a Latina, so I always get credit is not important. Credit because some guru said that we don't need credit to buy a house. What did you say about like that drives me insane. Like, I'm like, do they know the importance? We didn't cover the importance of having good credit score. Like, what do you say to your students and to your community about that? Because every time you mention it, you always get someone saying, well, so-and-so said we really don't need any credit score. And you're just like, what?
I think the issue is that we use terminology and we really don't think about what we're saying, right? It's just a lot of jargon. I'm going to buy a house. You're not buying the house. Guess who's buying it for you and you're paying them back? The bank. So would a bank buy you a $300,000, $400,000 house if they can't see how well you manage paying other people back? I would not. So here's what I love to say. And next time they say this, you tell them this story, but I want you to use their names, okay? You got Joyce, you got Chante, you got Chris. Chris is my husband. We're going to just use him, right? So me and Chris and Joyce, we all went to college together. We're all great friends. Joyce comes to me and says, hey, Chante, I'm just a little short. This week I got to get to work. I don't have any gas. Can I borrow $20 from you? I'm like, here, girl. You said, I'll get it back to you next Friday. Next Friday comes. Here's that 20. I'm like, okay, girl, thank you. 2 months later. Oh, my kids, they need lunch or snacks for the week. You have a quick 200, like I get paid in 2 weeks. Next Thursday on the 15th, I got you on it. I give it to you, you pay back. I never have to hound you for it. I don't have to call you for it, text you. You're just like, here you go. Thank you. You're giving me the money back when you said you would. Chris Now one day you come to me and say, Shanté, do you know Chris borrowed $100 from me 3 months ago? I keep calling him. I'm hounding him. He sends me straight to voicemail, or if he does answer, he has some excuse about why he doesn't have it this week. So you say, I'll never give Chris another dime. Now, Chris has never borrowed money from me, but you just told me how he was with you. So when Chris comes to me and says, hey, Shanté, oh boy, this has been a tough week. You got 20 I can borrow real quick? What am I going to say? Yes or no? Heck no.
No.
Because Joyce told me how irresponsible you were with money. So why would I take a chance on you and not, or I can say, you know what? I don't care. You can have $20 because that's between you and Joyce. You never borrowed money from me before. So I don't think you're going to do me dirty. Or I can say, this seems like something that he does. So I don't want to take a chance. I was able to see what his credit was like with Joyce before I was able to take a risk. So now you want a bank to buy you a house, and they can't determine how well you've been able to even pay back a credit card that you borrowed money from. So I would like to see somebody get financed for a house with no credit. Now, if you have Oprah money or Tyler Perry money, listen, dump your cash on the house and go about your business. But if you need financing, you need good credit. I don't know how else to say that. They need to see how well you've been able to do. When you go to college, why do you think they want to see your transcripts? How did you do in high school before we let you in here? And even though you do have to pay us to be here, we don't waste our time and we don't want to waste yours. That's why they have requirements. You need this SAT score to get in here. You need this GPA to get in here. So you need this credit score for us to buy you something so you can pay us back. So prime example, client, $515 a month on her car. It didn't hurt her because she made good money. $515 was nothing to her. But I said, I did some math for you. Let me give you some numbers here. I said, you've been paying on your car note for 18 months now. You have an 84-month term, okay? So $515 at 18 months is about $9,300. She was like, okay. I said, let me tell you how much of that $9,300 has gone towards the actual principal, $1,300. She cried on the phone. She said, what do you mean? I said, let me break it down for you even more. That means of the $515 a month you've been paying, only $65 has been going towards paying your car down. Where's the other money going? She was like, interest? I said, yes. So now tell me what your interest rate is. 24%. Why is her interest rate 24%? Because she has bad credit. It is expensive to have bad credit. So that's another thing you can tell your family, Miss Joyce. Listen, you might not see it now, but look how expensive it can be. So then I calculated how much she's going to end up paying for that car at the end of her 84-month term. 3 times the car.
Thank you. Because it just drives me crazy all the time. Every time I'm like, oh my God, just because one guru said, and the amount, when you have good credit, you save money. Like, it's hard to explain when you have, like when you have like good credit, they don't see it. They don't see the benefit. They assume credit to something negative in my community. Like they assume like, well, I am rich, or they go to church and they see this guru in church and they're like, well, credit score, it's bad, it's this. And then that's what I'm facing in my small community of online now. Like the emails that I'm getting, it's that I'm like, oh my gosh, okay, let me, because I don't have any debt, like I have paid it off. So sometimes I can't relate, or I'm just like, that's not really what I have, or if I say I have a mortgage, they right away assume, it's bad because I have to pay it off, things like that. But it's always that same topic, that it's the credit. It's the same thing, like you said, the why, the understanding as to why they got there. I see it in my community now because for some reason last year it boomed, like it went a lot, and now that's what I'm seeing now. So thank you. I really enjoyed this time.
Before we let you go here really quick, I just want to ask you, like, what are you working on now that you are most excited about? Where can people check you out? Where can people find you and follow you? Because they're going to need to after this. This was so informative and so educational.
I love it. You guys asked some great questions too. So thank you for having me. I know this was a lengthy interview, but I only scratched the surface of credit and the ins and outs and how it really works. And I tell people, it is a game. This credit is a game. And if you learn the rules to this game, you will be successful at winning this game. I don't know how to play chess. You put a board in front of me, I'm just going to be moving pieces around. I don't know what I'm doing. I'm jumping over you like I'm playing checkers. I don't know what's happening. But if you teach me the rules, I can navigate a little better. I might lose sometimes. It might take me a longer time to win a round, maybe 7 years before I finally beat someone, but I learned the rules, right? So that's what it's all about. Learning the rules and implementing them. Every time I watch tennis, someone has to reteach me the scoring because I always forget because I don't watch it enough to remember. So don't just learn this stuff and then sit on it. Learn it and start applying it so you can keep what you're learning in the forefront of your brain, right? So I started my company, Financial Common Sense, from my group. I have a Facebook group, Financial Common Sense, spelled CENTS. We are 200 people away from 96,000 members. Very active group, very busy group. I know Joyce is like, what? But that's where I do all of my free information, free content. I go live. I'm there just dumping the information. I'm reiterating things. I'm, singing people's praises when they have success stories, making people feel encouraged when they feel down. And this is a very encouraging group. No judgment there. And the people who do, they get kicked out without question. I don't have time for that. So if you want to join and just ask questions, or maybe just browse, just search the group. You don't have to ever ask a question. You can find every answer you need because everything's been discussed 500 times in the group. So join us there. I am on social media, other social media platforms, Instagram, at Financial Common Sense, and the Facebook page is Financial Common Sense Inc. because that's the business name. I also do one-on-one coaching sessions. So if you heard all of this and you're like, I'm still so overwhelmed, again, I am your GPS guide. Tell me where you want to go. I will tell you how to get there. I did a music video in April, a real live music video about credit and finance. And I rewrote the lyrics to Cardi B's newest song called Up. So I was like, convenient. We want to get those scores up. So I wrote the lyrics, found a videographer, got my girls together, and found some locations, and we shot a music video. Well, they do the Plutus Award every year. And one of the co-hosts reached out and said, we want to show your video at the Plutus Awards, which I almost passed out because it's a lot of people that attend. And so that was really great. And they also want me to help present an award. So that's not a project I'm working on since the video was done, but I'm very, very excited about that. The project I'm currently working on now is a home buying academy. When people say they want to boost their scores, they call me, we do consultations. I say, what are your goals? 99.9% of the people say, I want a house for me and my kids. I'm tired of this apartment. I'm tired of blah, blah, blah. So instead of me just keep saying, hey guys, this is how you build your scores up, let me be even more specific. This is how you build your scores to get here. So what is the home buying process? Here's some first time home buyer program information. What is an appraisal? What's an inspection? What does escrow mean? So just all the things they may hear and they're so confused. What's the difference between an FHA loan and a conventional loan? What are their requirements? All of those things. So that's what I'm working on. It's going to be a book, but also video modules. And so that's going to be combined with the program that I already have, which is the Credit Repair GPS Academy. And so if you don't want to do a one-on-one with me because you're like, oh, it costs too much, or I do better learning self-paced programs, then the GPS program is about half off what a one-on-one would be with me, but it still renders the same results. So, but yeah, just adding that home buying book because a lot of people are confused about even that. So you're already confused about credit. So you finally got your credit together. You're like, now I don't even know what to do to get in this house. Just adding that. So that's what I'm currently working on right now. And I'm so excited about it because I know it's just going to change lives more than, lives have already been changing. So pretty proud of what my members and clients have been able to do.
That's like my number one thing with my credit score is always, okay, I'm taking out a big loan, like a mortgage or something. And if your credit score is better, then you're going to pay a whole lot less in interest over the course of that 30-year loan. That's massive. So I'm so excited. I think that's going to help so many people. And thank you so much for being here. Oh my gosh, I love Shanté. She's a great educator. Like she's just so fun and makes it so easy to like think about these very complex topics,
I think I am going to go and discuss with my family about the FICO scores and the difference and what it's used and not used because a lot of people have a misconception about this. So it was good to know about, those apps that claim to change your FICO score instantly. That was a good topic right there.
For sure, for sure. And just all those misconceptions that, we always carry around with us. I love how she addressed so many of those today. So thank you, Chante.
Thank you.
All right, guys, if you enjoyed this episode, please leave us a 5-star review on whatever your platform of listening choice is. It's also super helpful if you subscribe on that platform, whether that's Apple Podcasts, Spotify, Stitcher, whatever. You can also check out our website, momautismmoney.com. We've got all our episodes up live there. You can subscribe to our email list there as well. And you can join our Facebook group, and that is just the Mom Autism Money Facebook group. And in there, we talk just a little bit more about all of these topics in depth, and you can kind of connect with other parents going through some similar situations. All right, we will see you guys next week. Bye.
Bye.